Hello guys, welcome back to the second half of this recording. Without much ado, let's probably get back to the chart and see what and continue from where we actually stopped. All right. Guys, before I continue, let me just quickly correct something that I said in the earlier video. Just listening to myself, I realized I made a mistake that I never corrected so that people won't get confused. Now, where I actually did stop in the last video was where I said the combination of this blue can do, this almost like a doji can do, followed by this very strong bearish candle is a bearish signal, not a bullish signal. This is what actually made us to realize that if I was in this market, then I would probably have, sold this market here, right? And I would have made money if I have the kind of understanding that I have. I'm not sure my understanding in forex at that time was that deep, right? But, I think it's much better now. I'm a very good trader now, and I can explain properly how to get into this kind of trade. All right. So this is a very, very strong bearish confirmation, right? Not a bullish confirmation, just to correct what I said in the previous video, right? Now, don't forget, we are actually coming to this side, all right? We're actually coming to this side because this is the current market. But let me just quickly show you guys something on how to enter a trade effectively, especially when you see a bearish signal. Seeing a bearish signal or a bullish signal does not mean you should just jump into the market. You just need to add other confirmation and probably just check, what things are doing in lower time frame. Remember, this is a monthly time frame. If you have to enter this trade because you see a bearish signal, right, and just jump, you are probably going to be, with holding your trade and you'll be seeing red for a very long time. Look at what happened. Price actually got to this place. And if you look at that, is 922 pips before the reversal. So if you see this kind of signal in the market, right, and you jump into a trade, you're probably going to be risking your money, except you have a very, very big account and you are trading with very small lot size. Don't ever try to do this. So I'm going to show you a very simple secret and techniques on how to use, to enter this kind of trade. So let's assume that you are in this market. For instance, let's assume that you're in this market and you see something like this. Let's actually walk back and let me just quickly show you how I personally enter this trade successfully in lower time frame. So let us assume that all of these things have not happened. All right. I'm going to do some kind of playback. Let us assume that this was what I saw in the market then, right? So this is a monthly, mind you. So I already know that this is a very signal, but something is very, very important for you to note, before you jump into a sell trade, right? First and foremost, you need to see that, the reason why there was a reversal from the point where we saw that reversal is simply because of this bullish order block. As you can see, right? Actually, if I was in this market and I see this on the monthly, it is an opportunity for me to even take a buy trade. But let's even, assume that we're not taking a buy trade. We're just looking at, at a place where we can actually enter a sell trade. So the next thing I am actually going to do is to draw my trend line. All right. Now, as you can see from the trend line also, right, price has actually not broken that trend line, right? Even on the monthly, price has not broken. I'm just trying to tell you some of the things you might need to check before you jump into a trade, even in that same lower time frame. Even if you want to make it a bit steep, so this is what you would have done, you will see that anyhow you want to try and manipulate the market in your favor. The market doesn't have any respect for you. You have to actually see exactly what the market is doing. You can see apart from seeing this confirmation right here, right? This confirmation. Now, the reason why I believe was just because believe the market is going to sell is because of this, bearish pattern. But mind you, I call this a bearish pattern because this is what we call evening star, right? When you see three candlestick pattern like this, you see a bullish candle, you see something like a doji or a rejection, and especially when it is like this, and you now see, a strong bearish candle that is actually taking out the previous low of the, middle candle. This is what we call evening star. You have been taught in FinSpot Academy. This should not be news to you. This is evening star. This evening star is actually a confirmation that price is going to continue to the downside. So, two things you can do. Now, any bullish or any person or anybody who has a bullish bias will probably just see this as a confirmation to buy. The question is, where do you need to buy to? For me, I will never, if I'm going to buy this, I'm going to go to lower time frame to get much more confirmation. Look for, bullish pattern, in this area. Let me mark, don't forget, I always like to mark my bullish order block green, right? Let me also change this to green, all right? So if I go into this particular area, this area in lower time frame, let me even just mark this monthly candle, let me just mark this area so that I know the particular area I'm going to be watching out for price action when I get to lower time frame, so I'm going to be watching out for what price was attempting to do here within that yellow circle in the lower time frame. But now, let me also tell you why I will buy this chart. I will buy this if I want to buy. The question is, where am I going to buy to be safe? For me, I'm going to buy up to this point, right, to be safe. So let's assume I get into the market. Let me even do a little bit of playback, right, before. So let's assume I get into the market, right, and I only saw the monthly candle closed, like this, right? So the next thing I'm going to be doing is to, as you can see, you can see that price actually rejected the middle of that bullish order block, which is this. As you can see, price rejected it. And if you look at it very carefully, you will see that price did not even get to the middle, but around that middle, price actually rejected. All right. Now, to that extent, what I'm going to be doing is to go to lower time frame and start looking for signs of reversal to the upside or a bullish signal. What do I mean by a bullish signal? Right. Now, one of the things I'm going to be looking at is I will go to lower time frame to see, just watch what I'm about to do. Maybe I should take this one to the bottom so I don't distort the chart for you guys to see. Right. So I'll be looking for this kind of pattern, right within this area right here. Okay. So I will go to my chart, and I'll go to lower time frame, and I'll be very, very patient to see how price will react to this area. This was what price did. Price came back here and started rejecting, So what I'll be looking out for is I'll expect some level of consolidation. I'll see price. Once I see a change of character, right? That is, what do I mean by a change of character? A change of character is when I see price close, take out, or close be above, right? If I see price close above a previous high, now breaking structure within the internal structure, right? Then the next thing I have to come and do is to come to this area. Let me show you very, very well. This is what the mistake a lot of traders make. If you look very well in lower time frame, you can go to much lower time frame, and then you either see an order block or a fair value gap, right? You see a fair value gap right around this area, and then you can then use either the other block. So you can have a conservative entry right here, right, to buy the market, right, either from the consequent encroachment area of the fair value gap, which is the consequent encroachment area is the middle of the fair value gap, right? And your stop loss will have to be below the previous low. Or you wait for price to get to the middle of the order block, right? Within, the new order block created within that order block, because you have seen price action and you have seen, a change of character. So what you then do is to either come to the middle of this order block. Let me just mark that order block with a different color so you know what particular order block I'm referring to. You see that yellow area, right, is a conservative entry, but your stop loss should be at the same point, and then you take it to, the bottom of the candlestick in the middle of the evening star. And the only thing you can do here to be on the safe side is to reduce your lot size or break your lot size into two, take an entry at the consequent encroachment area, and take another entry if price gets to the middle or the bottom of the order block. Now, what you then now do is that once price moved, into profit, to a very significant profit before getting to TP, you either close, right, the first entry that is higher than the previous one, or you move it to, break even. I will advise a close so that you don't leave money on the table, and you move the second one to break even, right, such that, it can get right into TP. This is how to enter a trade. You must always wait for a bullish signal, which may come in, which will start with a form of change of character, right? And then once that change of character happens, if it's a buy, bias, you go below, then you then look for an order block, a fair value gap, or sometimes an order flow. So these are the, reference points you can look at for basically whenever you see this kind of traits or behavior in the market. The first one is you look for, in order of priority or in order of preference, is the order flow. If you see an order flow, please, order flow take preference over order flow take preference over fair value gap, and fair value gap take preference over order block. The reason why some of us always try to enter trade and then we put our pending order and price never gets to our entry is because we fail to realize that there are several institutional reference points in the market, and they also have their order of preference. So let me make this very, very clear. Okay, an order block, right? So you have the order flow taking preference over the fair value gap, and the fair value gap taking preference over the order block. Sorry, I need to correct this. This is not block, sorry. It is actually order block, order block. I hope you are following this. If you pay attention to this particular video, trust me, you will know how to enter a trade on your own Forex is very, very interesting. Just understand what you're doing and lay your patience on it. So don't forget what I said. The reason why I came to explain this below here is for you to know what we'll be looking for. And I said we'll be looking for after you'll be looking up for the first thing we are going to be looking for is a change of character. The first thing to look out for, the first thing to look out for is a change of character. You know, church. Okay. So when you see church and what some people call it shift in market structure. Some people call this shifts in market structure or shifts in market structure. Shift in market structure, right? Sims. So I'm just saying this so that when you see shift in market structure anywhere online or whatever, you know, just know that, you know, church and shift in market structure is actually referring to the same thing. So the first thing we're going to be looking out for when we start waiting and watching what market is doing is the change of character, or what some other people call shift in market structure, or let me even say change in the direction, or a sign of a change in the direction of, you know, price movement. All right. So now to start with, what we are looking at for here or what is actually giving us a confirmation, you know, that overall we are going to likely sell is the fact that we have seen this. However, if you want to take a short buy within this order block right here, and you can see this very well, look at this very well, you will see that price is always reacting in this area. As you can see, price was a rejection here. It came down, it broke it. When the time is coming back, it could not break that zone. So it tells you something about this particular zone. So this is an area to watch out for, right? I would need double confirmation to be able to sell this market if I see a bodily closure below this trend line, and ultimately a bodily closure below this order block, and I will then come here and take it down to the next order block. So let's see what price is likely to do, and let's see how I personally would have entered a bad trade. So I would then first and foremost go to weekly and see if there are signs of reversal. Now, on the weekly, there are no signs of reversal. So it is, mind you, we are watching the yellow zone, all right? There are no signs of reversal. Instead, right, what I could see is actually a confirmation of the downward trend, like, right? Let me just make this a pink color. You can see why the downward trend is getting much more confirmed. All right. So what I need to do is to then go to daily and see whether the daily has even tried to give me any sign that it was ready to go down. But I still cannot see any sign on the daily. However, watch something. The reason why you need to be very, very careful. Look at this. The middle of the order block is still this, is still this red line that we got from a monthly time frame. And you can see price is just going back and forth within the month. All right. This is where a lot of us make mistake in trading, right? But we are not seeing any sign of reversal yet. All right. So if I then go to the 4 hours, what am I seeing in that same zone? Now, guys, look at something here. Look at something here. Just look at this. Interesting. You can see that after this 4-hour candle, the next blue candle that painted is going upward, and the third one is also a bullish candle. Then the next thing we should do when we see a thing like this is to play forward. Let's play forward and see. Guys, I am looking for a a change of character, and I would want to see price. First and foremost, take out this spike that was created here, right? So I would like to see a closure below this green horizontal zone. If I see a bodily closure, then I'll then go to much lower time frame and use this area as an entry to buy. And then let's see what price then did. Let's go to, let's play forward a little bit and see what price did. Let's see the next candle. It was a down candle, the next candle. Let's see what's going on here. As you can see, right? And the price is moving, upward, right? Because I need this now. Let's pause here. Interesting. Remember, I said I needed a closure above this area. And let me now bring this thing down home very well for all of you, right? To see how this thing works in real life. Okay. Now, the first thing I can see here is a very clear change of character, guys. Let me just show you where the change of character actually occurred for me. You can see when price was going on, right? This, after this bearish candle, there is a blue candle which is bullish. There is a rejection of the next bullish candle, which is the third candle from here. So this rejection, first and foremost, is telling me to be very, 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 very careful as a trader. All right. So I'm going to be patient. So I'm going to wait until I see a bodily closure above this particular candle. Let me mark it, this particular tip right here. All right. So this is where patience is needed in the forex market. So as you can see, I was able to get that right here. All right. Most of you know that I waited for good for about 3 weeks before I could get into the sell. And right now I'm making a queue, right? Because that's what patience really does. I had to learn patience in a very bad way. Now look at something. I have a bullish confirmation in 4 hours. All right. Why? Because I can see here that, price actually move. This bullish momentum is very strong. I was explaining something earlier, right, about fair value gap, order block, and order flow. All right. Now, if you look at, let me just quickly, as a matter of fact, let me clear the chart because this is getting very interesting. I will not clear it because of the markup I made in lower time frame, sorry, in higher time frame. So we can get back to it so I don't have to start all over again. But look at something, right? Very, 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 very instructive. Look at this blue candle. It actually closed, the body actually closed above this tip here. This is a change of character. This is a change of character. This is actually where church. This is actually where the change of character occurred. All right. Now, having seen that change of character, right, you then have your bullish confirmation. But the question, remember what I told you. If you want to buy this market, don't just buy this market because, the market has actually, shown you a change of character. Price would always, always, always come back. No, let me not use the word always, but more often than not, price will always come back to either the fair value gap, which is this one. The fair value gap is the distance between the high of the first candle that was heading towards the upside and the low of the third candle. This is what I mean. This candle, the low of the third candle, like count from here. This is a 3 candle price action, right? This is one, a bearish candle, a bullish candle. This bullish candle actually created a fair value gap, right? Why is it called a fair value gap? It is called a fair value gap because the high of this black candle and the low of this blue candle are meant to be connected, just like what you saw here. There is no gap between the high and the low of this candle and this candle, right? Another fair value gap you can see is between here and here because there is a gap here, all right? So I'm just showing you how to identify fair value gap in the market. And let me also mention that there is a tool. I don't want to bore us with this video. I don't want it to be too long, but I'm probably going to do another video to show you a tool you can use without trying to strain your eyes to find, because some fair value gap can be very, very tiny. Without trying to find a way to look for where the fair value gap is, there's a tool that you can use. It's actually on my chart. Let me just put it, let me just open it for you to see. You can see that actually showed me that place. You can see that gray line actually showed me that place is a fair value gap. All right, right? Fantastic. Let me, let me turn it off again. All right, and turn off the EMA. Right, so now you see the middle right here, the middle of this fair value gap. Sorry guys, this video is likely to be very long because I want to take my time, to explain how to enter a trade. All right, so this middle of this fair value gap here at 92 is a possible entry, all right, zone for you guys. All right, so what you then see is you want to buy. But the question is, where are you buying to? You are buying to, let's go back to that monthly candle. You are buying to that point. No, that's the daily. I'm going to the monthly. We are buying to that point where we actually saw. I think I need to mark this out again. I think something went wrong with my, let me just come back to this point. And this is the point I really wanted to take off. Good, right, good. So if you go back, where we're buying to, we're actually buying to, as a matter of fact, I will use this previous high as a point of entry because this was the last high before this candle actually. So as price is going back, it's likely to come back to this area. So whatever I'm doing, I'm actually going to buy to this zone. So let's go back to our 4 hours. I'll play forward again just to see what price has been doing, right? So playing forward again. But mind you, I already know where I'm buying to. Don't forget, that was the point that I marked, 101, right? That I marked, right? Was that the point I marked? I'm going to check. Let's go back again. I just want to be sure that I'm marking the same area that I marked. All right. So this is actually the point that I really want to buy to because this was the previous high before price actually went this high, right? So I'm expecting that at some point when price is coming back, price is likely to come back and test this area. This is how sometimes I determine where I'm going to buy to. So I'm never going to buy beyond this area because this was the previous high that was broken. And when price was coming down, it violated the previous high by closing very strongly below it. So the likelihood of price getting to that point is very high. So now that we have identified where we are buying to, I'm just going to mark this zone so that I can identify it when I'm trying to mark, my entry. This is the zone I would like to buy to. I'll probably just, do something just below this area, all right? Just below here so that I don't miss my TP. So let's go back to the 4-hour time frame, guys. Right, I'm showing you this step by step by step by step. You see, this is where I marked in higher time frame this zone here, just in case you didn't get it. This is the area I am going to be taking my TP if I'm going to get into this trade. So all I've been teaching before now, or explaining before now, is what exactly shows you that this market is likely to buy. And I said the first thing you need to do is to wait for a change of character right around here. And if you play this forward again, this is what we'll get. You see price went up and came coming down, and then bam, bam, right? So let's pause here, right? So I was explaining before going back to where I felt price should get to, right? I said we saw a change of character right about here. Let me even clear this chart to show it very well, right? Let me even clear this chart for now, and let me even take this off for now, all right? This is the point I am referring to. This is my change of character. Is a change of character because that was the first time we saw a bullish close above this particular spike. And why did I call it a bullish close? It is a bullish close because that was the exact candle that actually, brought about the change of character, because the body of the next candle that came actually closed properly above, the previous high. This was the previous high, and this is the body of this candle. Let me just mark that place for you to see. This is the body of that candle that actually closed above that yellow spot, and this is the confirmation. But remember what I'm trying to tell you. Based on what we mark from higher time frame, we all agree that we are coming to this side in terms of our TP. That means we expect price to do something. Don't forget, price don't move in a straight line. That will do something like this, like this, like this, that eventually get to this point. But don't forget, I said we are going to take our TP right here so we don't miss any trade. So I'm going to leave this. But the question now is, where do I enter from? And that's what I was trying to explain earlier. That was what I was trying to explain earlier. I mentioned three very important institutional reference points that can be used, and I'm going to explain them very carefully. Now, what is an order flow? An order flow, right, will be the last, buy point. That buy, the last buy that happened before the sell. So the whole of this place right here, right, from this particular, let me just mark these points for you to see very, very clearly, guys. If there is nothing, if there's anything you need to understand about trading, it is what I'm teaching you right now. This was the last, this was before this particular sell that we saw here. This was the very last obvious low that led to this obvious high, right? That led to this obvious high. I'm actually looking for a down arrow, guys. Okay, that led to this obvious high. So this was the low and this was the high, after which we saw this particular sell down to, this is getting more interesting, to this point. So if you don't know what order flow is, this is simply your order flow. The low of this candle that was the last low and the high that was the last high, which means I'm making reference to this whole zone, this whole movement up onto the last blue candle before we now saw this particular depths up onto this point. This is the order flow. So that is the order flow. So I'm going to call this our order flow. So that is a reference point. This is the order flow. This is the order flow. Remember, I explained that earlier, what the three reference points that we can look for to know, where price, or where you use this sometimes to actually know where you're going to be taking your profit. The next thing is the fair value gap. The fair value gap is actually the low when, if you check this very well, just pay attention, guys, to this particular candle. pay attention to this particular candle. Let me just mark that candle out. Look at this candle here. This was a candle that caused that change of character, right? And look at it, right? You see, that is a black candle, which is a bearish candle. There is also a middle candle, which is a very strong candle that led to some inefficiency in price delivery, right? What do I mean by inefficiency? Now, this particular candle, after it formed, it did not give any room for negotiation. So there was inefficiency created. What do I mean by inefficiency? The inefficiency that was created that led to the fair value gap was actually the gap created between the high of this black candle. Mind you, I said earlier that fair value gap is a three candle price action. So you have 1, 2, 3. In any candle, there is always a low, there is always a high. For this particular candle, this is the high, this is the low. So the high of this candle at this point, for this particular candle, this is the low, this is the high, and then we are making reference to the low of this candle. You cannot see any spike in between this high and this low. So this is what we refer to as fair value gap, guys. This is fair value gap. This is fair value gap. So now, this is the second reference point. Let me just change this color to something else that can be very obvious for you guys to see. Maybe when you are reviewing this in the future, maybe I should probably just make that light blue. So the other flow is the light blue area. The fair value gap is this area here. And then one other thing I would like you guys to understand is that the middle of this fair value gap is called the consequent encroachment. I can never, emphasize this enough. Consequent encroachment. Consequent encroachment. All right. So, having seen this consequent encroachment, all right, and this fair value gap, so I will be high in my choice of entry the consequent encroachment area, especially because it is a huge fair value gap. The second area I will be looking at to enter a buy trade will be the other block here, which was the last, bearish candle. I'm taking it to the peak. This is a bullish order block. This is a bullish order block. I'm going to mark this place blue, right? I'm going to mark it green, right? Because I like green a lot personally when I'm talking about, order block or bullish order block in particular. So now, this is the whole of this place is called the fair value gap. I'm just trying to show you the whole of this gap here, from here to here, between 0 and 1 is called a fair value gap. This is me just explaining what I explained theoretically earlier, right? So that you can understand how exactly to identify these on your chart. So the 3 reference points that I actually, that I'm actually making reference to is the order flow, right? The fair value gap and the bullish order block. And I said to you that, in terms of reference points for entry, it is the order flow. All right, but here we are looking at a buy, and the order flow is likely to be used more as an exit point or a TP area. So if you are entering this trade, you can actually say, oh, this is your TP1, right? TP1, right? And then above it. So now when you enter this kind of trade, right, you see all of these areas that price has actually violated in the past will be your point of reference. So I will be expecting price to actually take out all of these areas, in the future, right? I'll be expecting price to take out this place, take out this place, take out this place, especially, right? But the question is, where do I end from, right? This huge imbalance needs to be closed. So for me, I would expect that price is likely to come to this area, spike up this, right? And then come back to either this place or the bullish order block before continuing the journey. So let's see exactly what price did. So if I'm going to enter a trade, I'm actually going to long this from either the middle of the fair value gap. If I'm doing that, then my stop loss will have to be below the order block, or I use the bottom of the order block itself, right, to enter this trade. But I'm not going to get into this trade unless it gives me this entry. Otherwise, I'm going to look above to get into another trade. So I will take it that I've missed that trade and I will let it go. So this area, which is the middle of the order block, will be my possible entry. But do not forget, guys, that we are going to as high as this bottom of this place. So this is actually going to be a good trade if it goes in a favor rather, and if you get an entry. So, but guys, make sure that your stop loss is just below the order block. Look at this. This is a ratio 1 to 24. Of course, that's because we actually, made our entry from the higher time frame. It was a top-down analysis. Now, another thing you probably just need to look at as price is going up is that this is also another fair value gap. And the middle of that fair value gap could also be a TP area. You can also say, oh, I will take my TP to around there if price eventually gets to that point. Or you close your trade, look for another entry and make those areas as you see, some confirmation to enter into new trade. So let's see how this played out, but let's go to daily time frame so that we can be fast. So based on what we have done so far, let us continue. As you can see what price did, right? Price actually, still closed above, the still closed above the still closed above the fair value gap, right? After the spike, of course, we waited for this spike to happen. Let's go back to 4 hours just for me to explain that again, right? You can see the actual point that price, actually got to was here before we decided to say, let's enter. So let's take it a little bit from here. And I need to make this a bit faster so that we can actually see what price is doing. So let's see. Can you see, guys? Bam. Price, what did the price do? Price came, right, to, you see why we have to wait. When price got to this place, what happened? It respected the tip of the order flow. Guys, look at this. Look at this. You just look at this. Patience, 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 patience. And look at it. It respected it, right? And then took entry from almost our exact point. And then see what price began to do thereafter. And then see, came back again, gave another entry, came to this particular point and used it as another order block. See the order block right there, guys. This is the order block. And then you see what price did. And then it kept going and going and going, gave us TP1. Now, let's see. Now, guys, see something here. See what price did when price got to the consequent encouragement zone. It respected it. It just respected it. It just respected it, guys. It respected it, and guys, that is why it's important for you to have this understanding. There is nothing that I'm using to enter this trade that we have not taught in, FinSpot Academy. Let me pause this and probably just increase this and let's just quickly see. Let's take it to the daily time frame or even the weekly, just for us to see how this eventually worked out, to our TP. Mind you, our TP was here, right? I just wanted this to move fast, and let me just move this fast and pause it, and let's see whether our TP is going to be respected in any way at the end of the day. Guys, you don't have to take this kind of long trade, right? But I'm just showing you using top-down analysis to see, as you can see, our TP has been hit, guys. Now, one thing that I need you to understand, let's go back to the chart here, right? You see, what I demonstrated here was what was used to enter the trade. I said, when you see a change of character, right, you have to come back. What a lot of us do is that the patience to wait for any institutional reference point below that change of character is always our problem. We have seen a change of character. We have seen price change character. We need to wait for price to come back to either the order block or the fair value that created that change of character. If you do this all the time, guys, you always win the market. And this was how price actually moved, right? On on CADJPY. Sorry, guys. I think I'm talking for too long, right? On CADJPY and up onto this current market, up onto when price actually moved to. So let's just take this to this market, and then let's take it from there, right? And you can see, our TP just got it, and then see what happened immediately after. You can see that, if you want to stick to yourself, you will see that that area that we said price will actually sell from was where price actually sold from. And we did not take. You can see, remember, I marked this red line and I said, based on this particular spike that we saw here, I wasn't expecting price to go beyond the split for falling. Why? Because if you go back to the monthly time frame, let me go back to the monthly time frame. We already saw a bearish signal in every time frame. We only took advantage of the fact that we understand the market, and we know that price do not move in a straight line. So after this particular, price does not move in a straight line rather. So after this particular evening star, we still took advantage of a buy opportunity, for about almost 915 pips. Why? Because we already saw a bearish signal, and that should already tell us that this nigga was going to sell, and there was no point at all. And I mean, no point at all trying to because if we were going to wait, for the monthly candle to clear, we would have waited for 1, 2, 3, 4 months, right? So within that 4 months, we saw a buy opportunity, and we kept buying up until the time price got back to the previous high that was violated by this structure break, right? Which now led to this, downside. But look at something. Look at how long it took again. Price still came back to that bullish order block that created that high. Guys, this is how to be a successful trader. If you understand everything that we have taught you in this academy, and you apply it, and you practice, it will also help your patience. And look at now, let me now clear this chart and then use this understanding to see what price is likely to do in the current market. All right. So don't forget, this was the other block that price respected and died, right? Before making we are still on the monthly right here. So if I take this one to the current markets, guys, what can you see? What you can see is very simple. You see this candle here, this blue candle. If you look at this, 1, 2, 3, 4. Let me just mark this red so that you can know that we're talking about a bearish order block that has already been violated, right? This is a bearish order block that the price has finally broken above. But look at what happened before price could break above it. Price attempted it here, spiked above it. Mind you, this is our reference point. Let me just mark from this point here. right? This is our reference point right here. Let me make a different so that you can understand. So now come to this current market. See what you see, right? In the month of June 2022, price could not break it. July price, just spiked above it. August price spiked, but in even in September, but in October, look at this blue candle was a confirmation that this price was going to continue to go up. Again, just the same thing that I just explained earlier. If you look at when price actually broke this area, right? Broke this. See, when this candle that closed above this zone, right, actually showed us that this nigga was going to go up. All right. But it took 1, 2, 3. It still came down and closed below. Why? It is very simple. I told you guys about fair value gap. I told you about fair value gap. Just look at price came back and still respected after confirming the upside. Price will still always come back to either the fair value gap or the other block. This was the other block that led to that initial high. What do I mean by the other block that led to that initial high? This was the last bearish candle before price touched this particular peak. And that was the peak that price touched before actually dying. So, very simple, guys. If you check this now, this is where what price has done. Now, don't forget, I like to mark my bearish order block. I like to mark my bearish order block green, right? For consistency. See what happened. If you look at, remember when I was explaining earlier, I mentioned that the consequent improvement zone is very, very key. It's very, very key. Price came back, and all price did was to come and respect a consequent encroachment area. Now, between the 1.25, 0.75, and 1. I mean 0.5 and 0.75. And then you see price after creating a bullish pin. This is what we call a bullish pin. A bullish pin is actually a bullish signal, right? A price that was a bullish rejection. That was a rejection, right? Bullish pin, right? And then what happened? For 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, price continue to go. Now, guys, look at something. This is where we will now need to find a way to apply the same method that price applied here to our entry. Now, look at something. Look at for 1, 2, 3, 4, 5, 6 months. Price was unable to close above the previous high that was created. As a matter of fact, for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But let's even ignore all of this. Let's just focus on this area. We can see that the first attempt to break it was this blue candle here. This one, this one, this one actually went down, created something like an evening star, but could not succeed. It was a failure to go to the downside. And then look at this particular candle is the confirmation for a bullish continuation. So generally speaking, guys, this price is going to continue to go up. But guys, I'm going to clear all of this and then show you. Now, what is important in all of this that I've been showing you is the fact that price has successfully taking out this particular previous high that was created right here. And this happened, right? This happened in September 2022. And the first time we saw a bodily closure above that high, right? This was the previous all-time high, created another all-time high here, created about all these other all-time high could not close bodily above, except the one that was created in March 2024. This is a bullish confirmation that this price is going to continue to go up. But where would then be the next bus stop right away? Is for us to then look for what was the high, the bullish order block. Now, if you look at this, was the last bullish order block that was mitigated. It was mitigated here. So this nigger here, right here, is irrelevant to our reference right now, at least not in the immediate, but this is now our next point of reference, which is actually a bullish order block that has been mitigated, but price has not traded back into its, ever since, right? So this whole zone up onto here, right, up onto this red line, which is 116, should be the next bus stop for CADJPY, while we then look at this rejection block as another area that price may want to test in the future. And when I mean the future, it could be anytime soon. Guys, now what are you seeing here? Let me just mark this guy's red because I'm talking about resistance, right? Because I'm talking about resistance, right? Because I'm talking about resistance, talking about resistance. So now, see guys, this is where we are. We are now in the current market, and this is what we can see. Now the question is, mind you, we are on the monthly time frame, all right? So the first thing I would like you to pay attention to is the fact that this is what areas where you need to start watching out for price action. And in watching out for price action, you see this particular candle here. This particular candle here was the last, on at least on the monthly, was the last bearish candle that painted, and it was followed by 3, 1, 2, 3, 4, and the current monthly candle is still bullish. So now our immediate target will be this point, and our next target will be this point, guys. This will be our next target. This point first, pardon me. This resistance first, all right? But the question is, will price continue to go like this and go straight? I doubt it very much. I expect price to come back to this area before, violating this, giving us a confirmation, coming back to this, and then maybe getting to that place, and then coming back to, I don't know, but you have to wait to see what price would do. So I think for me, our price will react to this area, especially the middle of this block, right? Which is for me a bullish order block, which I'm going to mark green right away just to differentiate. And just like this is also a bullish order block, we don't know where that price will be attempting to come back to that place anytime soon. If that is going to happen, it's likely to take a very long time for that to happen. But right now, our focus should be to check for any sign of reversal back into this area, and then it will be a good place, right? Let me remove this to buy, all right? So going back to our top-down analysis, I'm going to mark this particular resistance green just to show that is a, so let's now see what price is doing on the weekly, and let's see whether we can see any sign. Now, so what I will then do is to refine that other block that I saw. You can see that is not the most recent order block on the weekly is this one, and I'm referring to this one. So before price will get to this area, it will probably just need to come back and mitigate this area. And if you look at this area very well, price has traded back into this particular order block, and it has actually also traded inside this order block in lower time frame. And you can see right now, price is about to continue the uptrend. So let's go to daily time frame to see whether we can refine that order block or the most recent order block. I mean, as you can see the first thing that price is doing right now is to consolidate around here. So what I'm going to be doing again, to use the same technique that I used, in the earlier play, this area is a no trade area. If I'm a trader, I'm not going to trade. Why? Because there is consolidation going on here, right? So let me just even take this out just to show you something. So as a good trader, this is a daily candle. You have to wait for several days, which is not going to be a bad idea. Patience. Don't forget, I usually say that the market takes money from the impatient and give it to the patient. So you have to wait for a bodily closure and then see price go here, or you have to also wait for a bodily closure below and see whether price will come here before finally come here. You don't know. So right now, I will mark this particular zone that we have here a no trade zone. For me, I would not advise anybody to get into. If you are a day trader, or sorry, if you are a long-term trader, please, this is a no trade zone for you. This is a no trade zone for you. Guys, hold on. This is a no trade zone, right? A no trade zone for you. So for me, I'm going to wait because I want to take a swing down to the space. I want to see how this can, if I see a bodily closure, then this area, then above that area, then this area then becomes my entry in this place. The patient's dog, the patient's dog rather, and the fattest of it. And if you look at it, this is like 509 pips. It's worth the wait, all right? But if you are a day trader, right, you can then go to 4 hours and see if there can be any refinement. Yes, I can see a refinement. The refinement I can see is that there is an order block here. As you can see, price is already trading above the order block. So the first thing I would say I can do if I'm trading the 4 hour is, if I'm going to take a short-term trade, then definitely this previous high will be my TP, meaning that, if I see price continue to go like this, right, I will trade. However, I need to wait for price to see if price will come and give me any form of entry here before getting to this point. And as you can see, the lower the time frame, the lower the number of pips. So I can still get some 71 pips from here. Or if I think that I want to get into this trade right away, I can probably just look at 1 hour. The 1 hour will then show me something, right? Now, as you can see, in 1 hour, the first thing that has happened is that this order block right here, this bullish order block right here, which is the support, has already been mitigated, meaning that some people who have been using the same technique that I've been teaching, right, would actually come to this zone and use this particular point here as entry, and somebody would have gotten into this trade earlier, and whoever has gotten into this trade earlier would probably and then the stop loss would have been somewhere around this, and then the person who will be targeting this previous high and this other block that is right here. Guys, pay attention to all of this. Follow all the simple steps that I've actually shown you in this particular video. Mind you, your stop loss has to be somewhere here if you were in this trade earlier. What I have just shown you guys is how to enter a trade successfully, how to be patient for institutional reference point, how to trade like you are a bank, or how to trade like the Barclays of this world, HSBCs of this world, and all the big banks. So guys, with this explanation, I think you're going to become a better trader if you can just listen to this video over and over again. And mind you, I broke this video into two because at some point I was thinking my mic was not working, and that actually led me to stopping the video and then continue from where I stopped. Don't also forget that I corrected something in this new video relating to the misuse of bearish order block and bullish order block. I was showing you an evening star. Anytime you see an evening star pattern in the market, it is a sign of a bearish continuation. However, remember we were using a monthly time frame. We had to go to lower time frame to look for buy opportunity to the previous high that was broken, right? Because we expected price to break that previous high. All right. Maybe before I shut down this video, let me just quickly explain what I mean by that. So you see price, right? You see price actually going, like this, breaking structure, all of a sudden we now see a closure below this previous high that was created just right here. This was the previous high. The fact that when this price was falling, right, it closed below the previous structure that was created before this break of structure that actually led to this particular high right here, right? This is not in itself a bearish confirmation. What made it a bearish confirmation was the candlestick pattern that we saw, which was an evening star right here. And then what did we do? After this happened and we saw this closure, all we needed to do was to come on the trend, around the trend line, and look for an opportunity which was more like an callable, right? Or a fair value gap to buy the market to this point, all right? To buy the market to the previous high and then sell significantly from there. Guys, please take note. One important thing about what I've just said right now is the previous high that was broken and then another closure below the previous high. Then the previous high that was broken then becomes your entry point for the sell. And if you are buying in lower time frame, if you are doing a top-down analysis, then the previous the previous high will then be your TP, and then you can sell from there. I hope this video has blessed you. Please give this video a like, subscribe to the channel if this is being put on our YouTube channel, and then you can get to learn more. You see, get notification once you press the notification button. Anytime we share a new video. I hope you've enjoyed this, and I hope you will give this video a like if you really enjoy it. It's a very long video. If you can't watch it all at once, please take your time, watch it over and over again. It will help your trading journey and have a pleasant, day ahead. More peaceful day for you. Bye.